Travis, we've seen a whirlwind of activity with President Trump's early days in office, haven't we?
We certainly have. Yeah.
But the stock market, on the other hand, it's been surprisingly calm, hasn't it?
It has. Yeah.
And despite political turbulence, the S&P 500 has barely moved, actually, since Trump took office. Wall Street isn't too fazed by those headlines, are they, that are coming out?
No, I've actually seen earnings reports driving stock prices, individually more than we've seen the headlines. But
should be the way
should be that way because markets, they do tend to focus on tangible outcomes rather than political noise most of the time. And, Trump's positioned himself as a pro-business with promises of deregulation. Obviously, companies like that.
Yeah, for sure.
But there's also this notion that his more aggressive policies like tariffs might be bluster. We've seen this before, right? Remember, he's announced and then retracted tariffs multiple times before in his prior presidency and in this one. And most recently, the non-event we had with the Mexico and Canada tariffs that were just rescinded. So analysts called it, they said, hey, he's saying this, but it's likely to be short-lived, more part of a wider negotiation tactic.
Yeah, exactly, Travis. The market's fast reflexes are tuned to react to clear, immediate threats or opportunities.
Yeah.
Tariffs threaten, but their actual implementation has been very erratic, hasn't it?
Yeah, it's kind of what,
like you said, making the markets somewhat dismissive, and they're not overreacting to the information. Markets quickly incorporate new information, but that doesn't always mean they're correct, does it?
No, it doesn't. And, we like that because, sometimes we can buy things at a more reasonable price.
For sure.
And, the market's not great at pricing long-term systemic changes like shifts in democratic norms or institutional stability. We're talking about profound changes here that would affect capitalism in America, potentially. But their economic impact is going to unfold over decades, not days. So the market might be looking at the potential corporate profit from deregulation while downplaying the risks of tariffs and isolationism. We'll see as time moves forward here. But
there is an ongoing tug of war between these two forces.
Yeah.
Deregulation could spur growth, but isolationist policies could stifle trade. Okay. Yeah. It's hard to weigh these against each other in the short term, though. This calm market might be sending a message to Trump himself. As long as the market remains steady or grows, it could be interpreted as a vote of confidence in his policies for Wall Street. Okay, opponents hoping for the market panic to sway his decisions might be waiting in vain.
Right. And you just kind of pointed out some important parts there. A tug of war between these factors. How does factor one affect the reaction of something over here that's factor two? And trying to predict all that and saying that there's an absolute outcome with just tariffs or some other policy is nearly impossible. There's too many forces pulling on it to accurately predict it over a month, even a year, right?
It's so true.
So investors should really keep an eye on, policy execution rather than announcements. I'm going to announce a tariff. Are you going to execute on it? We've seen that here.
Absolutely.
If tariffs do start sticking, or if there's significant legislative movement on tax or regulatory reform, that's when we'll see real market reactions. Maybe the most important thing here, Steve, watch for the Fed's response to all this, right? I know we talk about the Fed a lot, but it is important.
Yep.
Any hint of rate changes could shift the market mood way more dramatically than we've seen with the tariff talk here. So
completely agree, Travis. It's been great. I look forward to it next week.
Look forward to it as well.